Banking versus retail mindset. Modest Phillips. Okay. All right, guys. How you guys doing? This is already recording. It's recording right as soon as we get started. So I want to introduce myself real quick for you guys who don't know me. I'm Modest Phillips. I've been trading for going on around 4 years. And what's amazing about my journey is that, like, my first year of my journey, I really, kind of put myself in a position to where I was grinding hard. I was grinding, but I was all over the place as far as my education when it comes to learning how to trade. With me being so new in the industry, it made me, hold on, let me show you guys my let me share my video. I want you guys to see my face when I'm saying this. All right, so not only was I so sorry, excuse the lighting, man, it is what I wasn't planning on even sharing my face. But not only was I a beginner in the industry, at the same time, I I was hungry. Like I wanted it. So I had no problem with putting in the time to study. I mean, like, I was in my mom's basement putting in 11, 12, 13 hours a day, getting on the charts, showing up the webinars, showing up the meetings and stuff. And eventually that juice ran out. Life happened, trials and tribulations. I allowed them to get the best of me. And I paused on my education for a bit. And then with the grace of God, I eventually got back to it. And when I did get back to it, I actually got started in a different direction. I was able to find an amazing mentor, study their work for a few months. And then about 7, 8 months, I studied their work. And then I got into a mentorship, a private mentorship, and I'm almost complete with. And I've been able to, see the other side of things because, we all, our goal, we have a vision. Like, I have a vision of being able to educate people all over the world, travel the country, travel the world, teaching people the skill set, teaching people how to be better people, but specifically teaching people, what I'm good at, and which is actually trading, understanding trading, the theory, the mindset behind it. How to do all the technical things behind it, how to do the little things and the big things, how to appreciate the journey, how to get to the journey mentally. And a lot of these things I'm saying it's my job just to make you guys aware of it. But at the end of the day, you have to come work. You have to come put into action to actually make these things come together. So what I want to do here, because I'm going to be doing a lot of different videos, a lot of trainings all over my social medias, YouTube, Instagram, and stuff like that. So I'm not going to make this super long, because then it'd take from me being able to do more, like at a high rate, because if I'm doing 2-3 hour videos, and I probably only do 1 or 2 a week, but if I'm doing 30, 40, 1 hour videos, I might even do it something every day or every other day at least, because I have other things that I'm doing. But let's get into it. We're going to stop this video share, and we're going to share my screen. And if you guys, I know a lot of you guys, I said I was going to start this at 6 p.m. So I'm probably sending a lot of you guys this recording. So what I want you to do is just take this in. I'm going to make this so super, super basic and easy because I'm trying to indoctrinate people into my mindset. Now, right off the bat, we are pretty much, if you don't know what Forex is, then you probably should watch some of the other videos that indoctrinate you. If you're a part of my company, then if you're a part of my education system, then obviously we already provided you with everything you need to give you the basic understanding of Forex. If you still need continuous help on that, reach out to people, the educators in the company, and we'd be glad to help you. Company, whatever. Okay, so let me go to, let me see. Okay, so when we first learned about Forex, I know we all decided we want to make money. We want to get into it. We want to do our thing. But what I quickly need you guys to understand is that this is the biggest financial market in the world. So if you take the skill set serious, it is possible. You could be great. You could be successful at this. Like, there's no time restraint on you, but you have to work. I guarantee you can claim it right now. You can claim it today that for a fact, 100% sure, 100% fact that you're going to be successful when it comes to Forex trading. But the only thing that separates from making that a reality between it staying a dream is you actually putting in the work. Like, being able to do the tedious things, like we're going to be telling you guys to do things that comes to trading, not only in Forex, but in life, right? Be willing to do these things and these dreams can come true. So let me go over what an institutional mindset, a bank mindset is. When you're learning trading, you're provided with these tools. You're using all of these different type of things. Like, for example, you see how TradingView provides you with all these different tools: trend lines, anchor wraps, horizontal lines, arrows, rays, right? Paintbrushes, Fibonacci expansion tools, right? Just a ton of different tools that allow people to be able to make projections on in a form of technical analysis, right? No matter if it's measuring strength using a oscillator, which is basically a momentum tool, right? Or no matter if it's using lines and horizontal and diagonal lines to test and measure strength in support and resistance, meaning buying and selling pressure, right? So the important thing is to recognize is that the common thing isn't so common when it comes to this game. I know you're excited. I know everybody is excited. And just the fact, if you are showing up, then you're doing the thing. But the point is, this market is ran by huge entities, which are in the form of central banks. Like, I'm not here to argue with anybody, and this is just my theory, so you can believe what you want to believe. You know, nobody's paying me here to deliver this information. I'm just sharing my ideas. That the market is moved by central banks. And what moves the market isn't traders, isn't retail traders and this and selling on Wall Street, which is actually what moves the market is the central bank delivering liquidity in the form of sell or buy side liquidity. Buy side liquidity meaning the market buying up. Sell side liquidity means the market going down, right? And then smart money entities, what we call ourselves smart money. We're trading with smart money versus street money, which is retail traders, right? We're institutional traders, smart money, right? So to get in as far as being smart money and take out the uneducated money. And they do that in the form of, when they're delivering this liquidity, smart entities are allowed with the correct and common knowledge, with the correct knowledge, to be able to participate in these rallies and declines in the market. The market is not just about one asset pair or one asset class. It's a intermarket machine. Every asset class moves lag or league, negative or positive, with other instruments and other asset classes. For example, Forex is an asset class. Instruments inside Forex are things like foreign currencies, Euro USD, GBP USD, majors, USD CAD, USD CHF, right? But also you have a whole nother asset class in the form of the futures market, which exists as representing the rates of a country's currency or asset, right? So that will be in the form of the British, you won't be looking at GBP USD, you'll be looking at the British pound futures contract, right? And we have different platforms that we look at that information on. Why is this important? Let me tell you why this is important. The reason why this is important is because the interest rates is what highly affects the market. Every country is going to be aiming to invest in countries where their yields are highly interested, right? That's how we get into the commodity market. Now, I don't want all of this to confuse you guys. I just want to really give you guys the system. This isn't about what your strategy is, how you're trying to make money. You have to know what you're going up against. And this is what this webinar is for, to give you the mindset, to give you the theory of how this is actually a system, right? An algorithm. And it's mechanically, purposely driven to do specific things, all based on time and price factors, only due to an interest of high-end investors who have the amount of money to be able to make the exchanges and cover the exchanges that is needed to be made to get the market from point A to point B. And in the midst of that, we can have an interest as spectators, commercial bank spectators, hedge fund spectators. Like there's all of these different levels of people who participate in some form of instrument trading or instrument investing, right? It all stems down from being delivered from the highest level, which comes from the central bank. So just imagine the central bank making the waves and you just being, everybody else being a surfer that's just trying to catch the wave. You can't control the waves. You can't determine when the wave is going to come. All you can do is prepare yourself to get better at riding the waves, right? And which is what people do. So think of that same concept. The market isn't random. The market isn't random, right? There's specific ideas and strategies and things to look at. With practice and over time gives you a different perspective or adds to the perspective you already have in the market. A lot of people that I've worked with, a lot of people that I've studied and trained with come from all different viewpoints of the market, meaning a background in harmonics, a background in strong technical analysis, meaning confluence trading for trend lines and RSIs and divergence and stuff like that, even all the way to Renko bar traders, Elliott wave traders, Wyckoff method traders, like just, I mean, system-based traders, turtle soup traders, time-based traders. I've worked with all different kind of people. I learned from all different kind of people and still am learning because the journey is not over. But what I want to get you to understand over all of that stuff, right? All of it is just tools in the midst of the ocean, right? The thing that's going to keep you most accurate is actually learning price and then being able to learn simple fundamentals that you can apply to confluence with these price techniques, right? And can get you close and closer to being comfortable. Like I said in my group, I said in our group that our goal is to go from being a reactionary investor, meaning that something happens or somebody's saying something's going to happen, and then you want to do to be an anticipatory investor, meaning that we already have an idea, we have a method, we have a checklist, we have a strategy, we have a system that we follow, we have rules, we have structure that we follow to get us to the point to where if this happened, then I can do this. Not like, oh, if this happened, oh, I'm going crazy. Oh, look at GB, it's going up, da, da, da. You can't do that like this right now, right? So let's go into a little bit of the charts now. We're not going to go deep into the charts. Like I said, we're going to be doing, I'm just doing so many trainings, so much value, so much content. I can't just give everything in one video. And I want you guys to be able to stay with me and come back and get this value from me. So let's give an example real quick, right? So when you guys, actually use this. When you guys look at the market pulling up, right, like this, and novice trader will be looking at that like, okay, that's very bullish. In all essence, it can be bullish, but as easy as that is to see that it's bullish, why do so many people still have a problem with being able to make money with being buyers? Because this is a weekly chart, meaning that each one of these candles represent a week worth of price action. So not including the week that we're in, you can see the last 4 months, which is a month worth, last 4 weeks, which is a month worth of price action. Price has been coming up and down, and then eventually expanded to the upside. Now, the average person reacts to that. Don't know, even anticipate, or even know that a possibility of this level to be made. Where this level went up from, there's no support and resistance in here, right? Let's talk about simple, basic support and resistance. Well, not basic, advanced, whatever you want to call it. People tell you to mark out your lows, your highs, right? Your highs, or even if you're doing supply and demand, you'll be marking the body up to the wicks, right? I am not saying none of that stuff isn't valid, but it's all about what theory and what context you're looking at it with. Because all of us have the same tools available, but our results are based on how we execute those tools differently, right? I use the same arrows and trend lines that you use, but I trade 100% differently. It ain't the tools that make you, it's the knowledge and the theory. You get what I'm saying? So what I want you guys to pay attention to is this. As the market pulled up and pulled us going down to a lower time frame like a daily, what a person sees is all this all this price action going up. But in all of these retracements and times that the market was caught in holding patterns is the times that people lose the most money, indecision, fear of missing out, all of these psychological things that the market use to be able to plot and ploy on you. The market is all about liquidity. The market lives for liquidity. No moves are made without liquidity being paired. So let's give a brief definition of what liquidity is. We have two forms of liquidity. We have buy-side liquidity and we have sell-side liquidity. That sounds self-explanatory enough. But I'm going to actually go into detail. And sorry, guys, I know I said I can start at 6, but I had something pop up. I got to go get some people from the airport, so I had to start a couple minutes early. It is being recorded, so I'm going to share it in the group, and I'll also be uploading these to my social media channel, so you guys can follow me there too. Like I said, I'm not going to make them too long, so I can have time to be able to do these, maybe even once a day, different topics, different discussions, and as I go along and get an understanding of different things that people need help with, I can kind of make it more detailed about what people actually need. Appreciate you guys showing up, so I'm going to continue. So normally, so when you're caught up in a range of consolidation, that's when people lose the majority of their money. My mentor said 70% of his losses came in when the market was in the formation of a trading range or a consolidation, right? Because it's difficult. It's a lot of indecision. It's a lot of going one way, the other way. It's a lot of whipsaw. But even that isn't random, right? So like we talked about, traditional support and resistance, right? No matter if it's horizontal or no matter if it's diagonal, it's supposed to be looked at in a concept of offering you an area to buy and sell and showing you that the market is buying or selling that area. Does trend lines work? Yes, they do. But it's the mindset that you have behind these. The reason why the market went up isn't because it hit a trend line 3 times. It's a little bit more deeper than that. And if you don't understand past that, then you won't be able to develop through your losses and understand how to adjust to not just look at every trend line bounce or everything in a certain concept as the end all. The real reason, like I explained, that the market is moving is the parallel liquidity. So sell side and buy side liquidity. Sell side liquidity exists in the form of, how we look at it is the ultimate sell side liquidity is in the form of sell stops. Sell stops, the definition of a sell stop is orders that exist under a old low placed in the market, usually based off higher time frames, meaning 1 hour, 4 hour, daily, weekly, and monthly. And those orders, the reason why those orders exist is because when you're looking at an old low, let's say this is where I'm gonna draw out this trend line like this, and I'm gonna pull it up to this low. So this low right here that I'm indicating, below that low, you have protective stops, which are in the form of stop losses. Because obviously if the market has been going up, there's people that's in profit, so they have to protect their trades. And then you have a different type of sell order that exists in the form of a sell stop. I know a lot of you should be familiar with sell stops are, and if not, real quickly, briefly, a sell stop is basically a pending order that allows you to, if the market was to go to that order and activate it, it'd be automatically activated as a sell order with that investor anticipating that the market will continue going down. So those things existing below a low and then in the form of buy side existing above a high, meaning that as this market was going down, there was protective buy stops above here in the form of people having stop losses to protect their profit, right? Like we all taught to use stop losses, right? Every limit, every order is liquidity. No matter if it's a stop loss, no matter if it's a stop, buy stop, sell limit, buy limit, even a stop loss is a order. When your stop loss is hit, somebody is taking the other side of your stop loss. So if I was stopped out on a buy, that means that my order was used in the form of sell side liquidity, and a smarter entity brought that interest of liquidity back, not necessarily directly from you, but the higher time frames, the areas on the higher time frames gives us pools of interest. We call them pools of liquidity, right? So the higher the time frame, the better. The banks use the monthly, the weekly, and the daily to indicate their interest for where they want to move the market to, depending on if they want to deliver liquidity or pair liquidity or wipe some liquidity out to be able to engineer bigger moves. What I mean by that is when you had the market, when you had this low right here, and the market went up, a lot of people were, you know, always all the way sold on this market being a buyer's market, right? So this swing low, right? This low, this old low, when this market was up here, none of this happened yet. So below this old low exists sell stop orders, and I will indicate that a little bit more to you guys with this right here, right? Everything below here will be in the form of monthly sell stops, right? Because below the market is sell side liquidity. Think of it like this. A down candle is a sell candle. So it produces sell side liquidity. An up candle is a buy candle. So it produces buy side liquidity. But we're flipping the script here. So if in order to buy, if in order for the market to go up, if I'm telling you the banks, in order for them to buy, they have to have somebody on the opposite end of their trade. So what would they need to buy? They would need sell side liquidity. So a sell side liquidity exists in the form of institutional support, meaning old lows, which is sell stops below lows, and other reference points that we use that we look at as sell side liquidity. So when the market get to these levels, they're able to pair their interest to be buyers up with what? AKA sell side liquidity. So now you have a real interest in supply and demand. You have orders being moved around the market and liquidity being delivered. The reason why you're stopped out on a lot of trades is because the most interest is built up around old lows and old highs, because most people are placing their stops and most people are taught and trained in all the books and all the webinars, all the YouTube videos, all the trainings, all the back offices that you should pitch your stop here, that you should do this, you should take this harmonic. Like I said, it's not saying that any of that stuff doesn't work, but it's all about the context and theory you use it behind. I know people who are killing harmonics, killing Elliott wave, but they have a different theory of how they look at it. They don't look at it how 95% of other people look at it. I use the same Fibonacci tool, but I don't look at it and use it the same way that everybody else use it, right? So with this context, when they come below here, think of it as a pool of sell side liquidity. So in order for the market to buy up, they need to find the opposite end of their interest. With their interest to be buyers, so in order for them to buy, they have to have somebody sell it to them. So this is the concept that we get as liquidity is in the form of unknown or known liquidity. Dumb money or street money, we consider them unknown liquidity, willing or unwilling. You will be used willing or unwillingly, meaning that when you're taking these trades and you're pinning your stop loss in these places, or you're marrying in directions, or you're in the wrong context of market condition or any of those things, right? You are being used as a collective pool of liquidity to fuel smart money concept traders' trades. We are using your ignorance, if I may say, and please don't take that offensive, because I've been ignorant once before also, and maybe I could have found a better word, but your lack of understanding, which is it's a professional way to say ignorant, right? So at the end of the day, they're using that not viciously or shark infestingly, but this is how the market runs. It's not being used against you. It's just your lack of understanding that's making you be victim of it. Because in that case, then it wouldn't be people being able to adopt smart money concepts and being able to be on the winning side more than the losing side, as in results and as an understanding. One of my favorite sayings, and one of my favorite sayings that I created is, with knowledge and understanding comes confidence. You want to know what you're doing. You want to, even if you don't make $1,000 or $100, you at least want to feel that continued growth of understanding, like you're going and you're continue. As long as you're putting in the work, you should get that, right? Put in the work, keep your energy, keep your faith high. And the other 50% is putting in the work. You can't work yourself there, right, without faith, and you can't believe yourself there without work. You got to find that balance. So guys, institutional mindset, we're switching our paradigms. No longer are we thinking like, I'm looking for the market to come to this support and resistance, or, oh, look at this support and resistance. Look at this trend line right here. Look like it's building up a support. Even if we want to see if this market is support, we can't look at it in that form. We have to look at it as, where's the liquidity? Where can this market potentially make money? The big players in the market, where can they make money taking this market to? For example, if we were in buys in this area, we have to ask ourselves, the step two, we'd be asking ourselves, where could we book a profit? So if we accumulate sell side liquidity, meaning we're in buys, we now have to deliver that sell side liquidity, right? So now when we delivering that sell side liquidity, we have to deliver it to a place to where we can exit, AKA take profits. And we'll do it all over again, the pairing of orders. So now what we will be doing what we love to call looking left to get right. Because if I'm entering buys at a support, AKA a discount, right? I'm buying it low because if you're buying something, right, you rather buy it at 20, 30 cent rather than 90, 80 cent. And if you're selling something, AKA a premium, resistance, you rather be selling it at 90, 80 cent rather than 20, 30 cent. The reason why you're losing, the reason why your understanding isn't developing, because you're selling in discounts and you're buying in premiums. Like, this is a very basic webinar just to touch and give you guys institutional mindset. We're going to be doing I'm going to be dropping trainings. We're doing a lot of more studying with the team as we grow, as we continue to bring more people in with being able to help with these theories. You just have to show up and be willing to put in the work, and then over time it'll be there. Now that we're delivering the liquidity, now that we're delivering buy-side liquidity, we have to find an area to where we can make profit, meaning that we can book a profit on this buy-side liquidity we're looking. How will we be able to book a profit on that? We have to pair our buy exits with liquidity from the left side in the chart that exists in already previous buy side liquidity. Because remember, every order is liquidity. When you enter a trade, that's liquidity. When you exit a trade, that's liquidity. When you get stopped out of a trade, that's liquidity. All orders are a form of liquidity, either buy or sell side liquidity. The market is all about the pairing of institutional orders, right? Interest, the pairing of liquidity, the pairing of liquidity. I'm gonna say it 1,000 times, the pairing of liquidity. So as you get to learn more about different institutional support and resistance and kind of get to understand the grasp of time and price theory, you'll start to see this a lot more. I did a video, I dropped it in one of my private groups that talked about buy to sell, sell to buy, 1, 2, 3 patterns and stuff like that. Was just a visual depiction of being able to see the accumulation and distribution in these premium and discount levels, these support and resistance levels. But we're going to be giving a little bit more x-ray vision on that so you can understand the foundation. It's going to make a lot of that stuff make way more sense. We're here to be phenomenal, not just good and average. So that's what we're going to deliver. So guys, with that said, I'm going to wrap it up here soon. I actually want to go into one last thing to kind of help bring out this institutional versus retail trader mindset. Now, if you know, you can go over to babypips.com. And if you look at babypips.com, there's a whole school of pipology, like K through 12. They teach you all these technical terms. They teach you all these fundamental terms. They teach you about news, which is all latent terms, Forex, right? Lingo, right? For Forex terms, Forex theories, right? Even down to the strategies, down to the indicators that you should use, even down to the times a day that you should be trading, right? From the brokers you should use, everything A to Z, right? I am here to tell you, right? You better make sure that you have somebody who is showing you how to pick through that information, and so you can be getting the right information and learn how to use that information and not look at some of that stuff like the end all. Because some people have blinders on their eyes right now. There's some people who I even see who are good traders, but they can be phenomenal traders if they weren't so blinded by all of these indicators and all of these theories that really don't hold up in the court of Forex. So like at the end of the day, like, I don't know if it's ego where people not want to admit it, but if you submit to it, submit to that, you realize and you know deep down inside that there's something bigger out here. You know, it's not as simple as being able to Google this stuff. Just that, not saying you can't use a combination of that, because like I learned from many different metrics. But like I say, it's about having a full theory, and then that's going to determine how effective you're going to be able to utilize these tools. Like I say, we can use the same tools, but the way that I use it versus the way that you use it, because of the information that I have, is going to yield different results. Guys, I am telling you, man, make sure that you're getting the right information when it comes to this journey. It is so worth it. This stuff can change your life. Your life will be changed. I am telling you, I am deeming you change right now. When you're watching this video, if you're watching a replay, or even if you're watching live, I am telling you right now, by all the power invested in me, you will be changed. You will be successful in this. The only thing I ask, the only clause in that is I ask you to show up and put in the work. When it get hard, when you feel like giving up, because I felt like giving up hundreds of times. So I'm telling you, when it's coming, the storm is coming. When you feel like giving up, if you need a break, take a break. But promise yourself that you're going to get back to it, because there's people depending on you. There's people counting on you. And this information, I'm a high school dropout. I went to and did time in jail to get my GED. So I'm not the smartest of them all, but I did have a will and I found another way, and I've been consistent with it for years. And now I'm here to share this with you guys. This stuff actually works, right? There's multiple ways to look at the markets. No way is better than another, but I'm blessed and happy to be able to share my concepts with you guys. So before I wrap it up, man, just to recap real quick, I'm just opening up, trying to give you guys a paradigm shift on the market is way bigger than what you think. Even in a lot of this stuff that I just covered in this video, right? There's big players in the market, and it's not us. We don't have enough money to move the market. You don't know anybody that have enough money to move stuff inside the market. We have to figure out how to jump on board and get involved in the market and how to play these different sides of liquidity. The last key thing I want to blow your mind with is this. What I mean by is the market is not random, is the market is a full-blown algorithm. It's an algorithm that is programmed and ran by the combinations of time and price. These time and price theories are technical, fundamental, and some of them are even news-based, month-based, 3 months, 6 months, certain specific days that the algorithm go look back to determine certain different types of liquidity. And what I mean by time-based, there's certain times that things are usually done depending on the asset class. And it's so amazing, like when you start to open up to some of these things that are shared a lot, because the lack of, of it being known. But me being able to bring some of these things forward, I wanted you guys to know that this stuff is totally manipulated. It's a whole full algo. And that's what we're doing here. We're helping people understand it better so you can create generational wealth for yourself. So with that said, guys, I'm going to end this video here. If you're watching this video off a replay in one of the training groups, give me some feedback, let you guys know. And then like on some of the future trainings, we're actually going to be doing a lot more chart work. This is just one of the videos that I have to make, because even for people who are watching in the future, if you're watching this on YouTube, make sure you drop a comment. This will probably be your first time getting introduced to this. Whatever platform you're watching this from, I really want this to sink into you that it's a lot bigger than what you think, but don't think that it's too big for you to tame. With the right guidance and help, what we have here at B, what I have here at Royal Entourage, what we have here, and, in our Forex group, what we have here in our official group, we have here in our shift group, everything that we're doing, like, is aimed towards making you a better trader and a better person. So with that said, guys, I appreciate you guys tuning in. I know this is like not like, a normal training or whatnot, but I have to give you guys that mindset, because before we start talking about some of these things, like, there's going to be a lot of separation that's going to be required from what you think you're learning and from required what's going to be for you to learn in order to learn any of these concepts that I'm talking about. Let me just show you guys real quick. This is a group that I work in. We've been working for months and months and months. We all trade Forex full time. It's a group of 4 guys. What we do is 100% different than 95% of people that you're going to see in the trading industry. I'm not saying it to toot my own horn or anything like that, but I'm just spitting the facts. This is just what it is, so I have to say what it is. So with that said, guys, enjoy the video. I'm going to be doing a training with you guys tomorrow, and we're going to be actually getting on the charts, and I'm going to be breaking down the basics of institutional support and resistance and giving you guys an exercise that you can do. Also, follow my social media. It's Modest Phillips. On YouTube, we have Royal Entourage Global. Any social media platform, you can look me up at Modest Phillips. Follow me on Instagram. Follow me on Facebook. You can get into my private group for free if you're already a part of the company. I'm going to be doing trainings in there. I have trainings that's going to be pre-uploaded. That's going to be breaking down this stuff from A to Z. And I hope you guys the best, and I hope what I'm teaching you guys can be a blessing to you. So reach out to me. My inbox is always open. You can hit me up on Telegram at Modest Phillips. And with that said, wish you guys the best.